Hey there, are you looking for a simple yet profitable trading strategy? Well, you're in the right place. In this video, I'm going to walk you through everything you need to know to get started with trading on TradingView. First, I'll introduce you some of the best buy-sell indicators available on TradingView. These indicators are essential tools that can help you make informed trading decisions and spot profitable opportunities in the market. Next, I'll show you how to add and adjust these indicators on TradingView charts. Don't worry if you're new to this. I'll guide you step by step to ensure you can set them up easily and customize them to fit your trading strategy. Finally, I'll teach you how to use these indicators to trade and make money online. By the end of this video, you'll have a solid understanding of how to leverage these tools to enhance your trading strategy and boost your profits. So, whether you're a beginner or just looking to refine your trading skills, stick around and let's dive into the world of profitable trading together. Great. The first indicator we're going to explore is called Weighted Oscillator Convergence Divergence, or WOCD. This tool is fantastic for identifying trends and potential reversal points in the market. What's the Weighted Oscillator Convergence Divergence? The WOCD is a momentum indicator that helps you spot the strength and direction of a trend. It combines elements of both the weighted moving average WMA and the oscillator to give you a clear picture of market momentum. Essentially, it helps you understand when a trend is gaining or losing momentum, which is crucial for making informed trading decisions. How to add WOCD to your TradingView chart? Well, adding the WOCD to your chart is so simple. First, open TradingView. In the top toolbar, you'll see the indicators button. Click on it and then type in Weighted Oscillator Convergence Divergence and hit enter. From the search results, click the WOCD indicator to add it to your chart. Once the indicator is added, you can customize its settings to fit your trading style. To do this, go to the indicator settings window and click on the Inputs tab. Change the length to 14. Then adjust the smoothing 1 to 7. And then smoothing 2 to 9. Next, head over to the Style tab. Set the histogram option to columns. And disable the WOCD line, a smoothed EMA, and a smoothed SMA. Finally, you can change the color and thickness of the zero line to your preferences. Alright, now that you have the WOCD on your chart, let's talk about how to use it. Look for buy signals when the WOCD shows that the market is gaining momentum in an upward direction. Conversely, look for sell signals when the WOCD indicates that the market is losing momentum or reversing downward. By following these signals, you can make more informed trading decisions and increase your chances of making profit. So, when the first bar appears below the zero level, it indicates that the market is losing momentum or reversing downward. This is your sell signal. On the other hand, when the first bar of the WOCD appears above the zero level, it signals that the market is gaining upward momentum. this is your buy signal. However, it's important to note that the WOCD indicator can sometimes generate counter-trend signals. This means that it might occasionally suggest a buy signal in a downtrend or a sell signal in an uptrend. So, to avoid potential losses, it's crucial not to rely solely on the WOCD indicator for your trading decisions. To address this issue of counter-trend signals from the WOCD, I've got a fantastic yet simple indicator for you. It's called the 10 and 1 different moving averages. This indicator combines multiple moving averages into one, giving you a more comprehensive view of the market trends. The 10 and 1 different moving averages indicator includes various types of moving averages such as the simple moving average SMA, exponential moving average EMA, and the weighted moving average WMA. By combining these different moving averages, you can get a clear picture of the market's overall direction and strength. Adding this indicator to your TradingView chart is straightforward. Just from the indicator section, use the search bar to type in 10 and 1 different moving averages and hit enter. From the search results, click the indicator to add it to your chart. Once the indicator is added, you can customize its settings to suit your trading style. Go to the indicator settings window and adjust the parameters for each moving average. You can change the length, type, and color of each moving average to fit your preferences. Start by changing the first option to EMA and set its period to 20. Customize the color to your preferences for better visibility. Next, enable the second option, switch its type to EMA and set the period to 100. Again, choose a color that you like for this moving average. Then enable the third option. Select EMA as the type and set the period to 200. Pick a color of your choice to differentiate it from the others. Lastly, head over to the Style tab and adjust the thickness of the moving average line. This will make them more visible on your chart, helping you to easily identify trends and signals. The 10 and 1 different moving averages indicator is a great tool for identifying the direction of the trend. By using different periods for EMAs, you can get a clear picture of the short-term, mid-term, and long-term trends. The 20 EMA represents the short-term trend. When the price is above the 20 EMA, it indicates that the market is in an upward trend in the short term. Conversely, if the price is below the 20 EMA, it suggests a downward trend in the short term. The 100 EMA represents the mid-term trend. When the price is above the 100 EMA, it indicates that the market is in an upward trend in the mid-term. If the price is below the 100 EMA, it suggests a downward trend in the mid-term. And the 200 EMA represents the long-term trend. When the price is above it, it indicates the market is in an uptrend in the long term. And if the price is below the 200 EMA, it suggests a downward trend in the long term. So, an upward trend is identified when the price is above all three EMA lines, 20, 100, and 200. Additionally, the order of the EMAs should be 20 above the 100 and the 100 above the 200 EMA. This alignment indicates a strong upward trend across all time frames. A downtrend is identified when the price is below all three moving averages. In this case, the order of the EMAs should be 20 below the 100 and the 100 below the 200 EMA. This alignment indicates a strong downward trend across all the time frames. So, let's dive into an example to see how the 10 and 1 different moving averages indicator can help us identify trends. Imagine the price is below all the EMA lines and the order is correct for a downtrend. This means the 20 EMA is below 100 and the 100 is below the 200 EMA. In this scenario, the market is in a strong downtrend and you might look for selling opportunities. Now the price moves above the 20 EMA. This indicates that the short-term trend is shifting upward. At this point, it's a good idea to be cautious and avoid entering any trades until we have more confirmation. As the price continues to rise, it eventually moves above the 100 EMA. Now both the short-term and mid-term trends are upward, but the price is still below the 200 EMA. This means the long-term trend is still downward, so it's best to hold off entering any trades until we have a clear picture. Sometimes the EMA lines and price candles can get mixed up and not be in the correct order. When this happens, it's a sign that the market is uncertain and it's best to avoid trading. Once the EMA lines get back in the correct order and the price is above them, the trend is confirmed as an uptrend. Next, the price drops below the short-term EMA 20, alerting us that the trend might be changing. This is a signal to avoid trading until we have more clarity. The price goes below the EMA lines, but the order isn't correct for a downtrend, so we still don't enter trades. When the order finally becomes correct for a downtrend, we should look for opportunities to enter sell trade. However, if the price goes above 20 EMA again, it's time to stop entering any trades. If the price drops below all the EMA lines, the trend is clearly a downtrend. But if the price goes above the 20 EMA and 100 EMA again, it signals that the short-term and mid-term trends are changing. In this case, we should wait before entering any trades to see if the long-term trend also changes. Alright, now, are you ready to dive into how to enter buy trades? Let's get started. First up, you want to look for a buy signal. This is when the WOCD indicator shows the first positive histogram bar. Think of it as a green light signaling you to get ready. Next, it's crucial to make sure you're trading in the line with the market's uptrend. This means the overall direction of the market trend is moving upward. Remember those moving averages we talked about? They're like your best friends here. If the price is above all the moving averages, it's a good sign that the market is trending up. Once you've confirmed these conditions, it's time to take action. Open a buy order at the closing price of the signal candle. This is the price at which the candle closes and it's a good entry point. Now, to protect yourself from potential losses, set a stop loss just below one of the moving average lines. A stop loss is like a safety net that automatically tells your position if the price drops to a certain level. This helps you minimize your losses if the trade doesn't go as planned. Finally, let's talk about your profit target. Aim for a risk to reward ratio of around 1 to 1.5. Now, ready to dive into how to enter a sell trade? Let's get started. First up, you want to look for a sell signal. This is when the WOCD indicator shows the first negative histogram bar, signaling you to get ready. Next, it's crucial to make sure you're trading in line with the market's downtrend. This means the overall direction of the market is moving downwards. Remember those moving averages we talked about? They're your best friends. If the price is below the moving averages, it's a good sign that the market is trending down. Once you confirm these conditions, it's time to take action. Open a sell order at the closing price of the signal candle. Now, to protect yourself from potential losses, set a stop loss above one of the moving average lines. And finally, let's talk about your profit target. Aim for a risk to reward ratio of around 1 to 1.5. Thanks for tuning in, and if you always want to make a profit within any market, check out this recommended video on your screen now. It's packed with insights of mastering market trends and maximizing your gains. Happy trading and see you in the next video.